Welcome back to the channel. Today, we are diving deep into a book that acts as a true compass for any trader tired of the guesswork. We have all been there. You see a chart pattern, you get excited, you pull the trigger, and then the market does something entirely different. It is the classic trap of knowing how to identify a pattern, but having no clue what happens once the trade is actually live. In his masterpiece, Chart Patterns, After the Buy, the legendary quantitative analyst, Thomas Bulkowski, reveals the secrets of what truly unfolds after you enter a trade. Beyond the buy trigger. Most trading books are obsessed with the entry. They teach you how to spot a head and shoulders or a double bottom, and they tell you that the breakout is your buy signal. But Bulkowski argues that the buy signal is just the beginning of the story. After analyzing over 43,000 chart patterns, he realized that the way a stock behaves after the breakout follows specific, repeatable paths. He calls these configurations. Instead of just hoping for a profit, he suggests you match your current chart to these historical configurations to understand the likely journey your trade will take before you ever risk a single dollar. The science of market behavior. Bulkowski does not rely on theories or gut feelings. He relies on massive amounts of data. By studying thousands of individual trades, he mapped out how stocks typically move after breaking out of various formations. He discovered that understanding the post-buy behavior is the secret to avoiding disastrous trades and focusing on the ones with the highest probability of success. Think of it like a weather forecast for your portfolio. By knowing the most common routes a stock takes, you can set better price targets, know exactly where to place your stop-loss orders, and avoid the heart-wrenching experience of watching a winning trade turn into a loss because you did not know when to take profit. Patterns as psychological maps. At their core, these patterns are not just lines on a screen. They are visual representations of human psychology. Whether it is a triangle, a rectangle, or a broadening top, every pattern tells a story of fear and greed. Bulkowski shows us that by identifying the pattern, you are actually identifying a collective emotional state of the market participants. When you know where that sentiment is likely to go next, you gain an edge that most traders never find. He encourages us to look at the breakout as a moment where the tug-of-war between buyers and sellers reaches a breaking point. Your job is not to predict the future with total certainty, but to position yourself where the odds are overwhelmingly in your favor. Navigating the trade life cycle. One of the most valuable lessons in the book is that managing the trade is just as important as finding it. Many traders focus all their energy on the setup, but Bulkowski argues that the period after the buy is where the real work happens. He covers everything from how to handle earnings surprises to how to navigate price mountains and straight-line runs. He provides reliable strategies for determining how often a stop-loss order will be triggered versus how often the stock will actually reach its target price. This level of detail is what separates the professionals from the gamblers. By knowing the historical performance of your chosen pattern, you can manage your expectations and keep your emotions in check. Avoiding the disasters. The book is packed with identification guidelines that help both beginners and experts recognize common patterns. But more importantly, It sheds light on the red flags. Bulkowski points out warning signs that a pattern might fail, such as low volume on a breakout or an overextended move preceding the pattern. He suggests that if you see these signs, it is often better to step aside and wait for a higher probability setup. His goal is to save you from the trades that look good on the surface, but are destined to bust, allowing you to save your capital for the big winners that show real strength. Integrating data into your strategy. Bulkowski teaches us that trading is about probabilities, not certainties. He emphasizes the importance of patience and thorough analysis. By using his research, you can focus on the patterns that historically provide the best performance. Whether you are trading in a bull market or a bear market, the data-driven approach allows you to filter out the noise. He encourages readers to look at the statistics provided in the book, compare the performance of different patterns, and build a strategy that works for their personal risk tolerance. The key takeaway is that you should never trade in a vacuum. Your chart pattern is a tool, but it works best when you understand its historical context and its likely future path.